Hello investors, today we will talk about Websol Energy System Limited. So in this stock research report, we will tell you why the company can give 4x return by March 2027, and we will take you through everything, the promoter, what the company does, what are their financials currently, what are their future prospects, and why we think it can give 4x return in coming time. So here is company's overview. Company is based in West Bengal. Currently they have 1.2 gigawatt cell capacity and 550 megawatt module capacity. And the cell technology currently they make are Mono PERC. It is the current technology that is in the market, and now TOPCon has come, which the company is shifting towards in the next year. We will talk about that in detail in forward slides. Company's founder and CMD is Mohanlal Agarwal. He has years of experience. We will talk about that also. And company is ALMM approved, both modules and cells. The benefits of ALMM we will discuss in detail in coming slides. In this slide we will talk about promoter and management experience. So Mohanlal Agarwal has more than 30 years of experience in this industry. So having such a promoter of a company helps to navigate different types of technology that comes in long cycles. So as you can see, he has been successful in navigating from BSF cell module technology to Mono PERC cell technology, and now in the next year they will shift towards TOPCon technology. It also helps to keep an eye on the future. So the promoter is always on a hunt to get the best for the company. So currently they are based in West Bengal, but since they got a better opportunity in Andhra Pradesh, they have signed an incentive package from with them. So this type of incentives greatly helps the company to get the land in quick time and start their capex cycle. And also if that you can see they have a fixed capital incentive subsidy from them, power tariff reimbursement, subsidy on industrial water charges, and much more. So this greatly helps to cut the cost for the company in terms of fixed expenditure and also variable cost that comes in operating the factory. And as you can see, the fourth point, they have also signed an MOU with Linton to further backward integrate their manufacturing capabilities into ingot and wafer manufacturing. So ALMM 3 is also in the working for 2028, where the domestic manufacturer of ingot and wafer will be preferred in the government projects. Another key management personnel in their company is Sanjana Khetan. She is a commerce graduate from SRCC, and you can see her qualification. So the main here key to judge the Sanjana is through recent con call. If you go through that, you can gauge that she knows what she is talking about, how much expertise she has in the industry, and whether she will be able to capitalize on the opportunity or not. So when we went through that, we think she is the best for the job, and she knows how to capitalize on the opportunity. And another key person in their team is Vasanthi Shriram. So she is the chief technical officer. She has years of experience in process engineering, yield optimization, and efficiency enhancement. So cell technology is not your integration type of manufacturing where you get all the parts and you integrate. What usually module manufacturers does, cell requires years of experience, learning curve. So to successfully transition from module to cells to Mono PERC cells is not an easy task, and she has been key in the company to transition to cell manufacturing. So to sum it up, management plays a key role in every organization, and having such type of management helps in deep cells physics know-how through chief technical officer and years of experience, which brings in efficiency leadership, process automation, and many types of benefits. In this slide we can clearly see that the quality of the management of Websol Energy. So till 2018 they had 280 megawatt of BSF module line which was going obsolete. So they took a bold step by scrapping their obsolete manufacturing line and shifting towards that pivoting towards the new technology, Mono PERC cell technology, and it has paid off clearly in the financials of the past 2 years. So it tells a lot about the management that they are not short-term driven promoters. If hard decision is to be taken, they will take it. They don't bother about the stock prices. Immense confidence to an investor that company is thinking long term, and all their plans are aligned towards creating value for themselves and their shareholders. It's immense confidence to an investor that the TopCon technology, they will also be successful in implementing that, not only in terms of getting the manufacturing unit set up on time, but also ramping up it, because in cell manufacturing, ramping up of cells are not so easy, and given their track record, it gives immense confidence. When we go through P&L of a company, we give most importance towards Q&Q revenue growth and margin sustainability. So in Websol, as you can see, since Q1 FY25, when their first 600 megawatt cell line came online, there has been consistent ramping of the manufacturing unit and revenue growth, except in Q2 FY26 because there was logistic problem. So that wasn't a structural seasonality, or you can say it was a one-off. As you can see, in Q3 FY26 they came back and outperformed Q1 FY26 numbers also. And in the second slide you can see that for the past 7 consistent quarters their margin has been more than 40%, and their margin profile also tells you about the valuation that they are doing. Any company that commands such margins are usually a technology high company, therefore hence it is only the reason they are able to command such margins. Their margins are also in the industry are company leading. No other company commands such margins in cell manufacturing. So, and in the current con call, they have also guided that in coming 2 to 3 years such margin profile will be sustainable because of demand supply gap, and even though the cell lines are coming online or further competitors, the demand will always be more than supply. So here is cash flow of the company. So cash flow is the one of the most important statements that we go through while analyzing any company. So cash flow tells that whatever company is showing as profits is in P&L, whether they are able to convert that profits into cash or not. So as you can see that since the online coming of phase 1 of cell line, FY25 and 9 months of FY26, PAT was 155 crores and cash flow from operations was 167 crores. So companies not only able to convert their profits into cash, but it also shows that they have great terms with their debtors and payables. So cash flows are really important, because if you go back and study any company, cash flow are one of the majority reasons where company goes into trouble. With such cash flows coming into the company was also able to fund their next 600 megawatt of cell in phase 1 from internal accruals also. It also confirms that profits are converting into cash, and the debtors of the company is also reduced since the cell line came in. So here is snapshot of balance sheet strength. So as you can see, since the commissioning of the cell line, the total assets has increased by capitalization of the assets, and total equity has also increased. In total equity, majority of the increase has been from reserve and surplus, and reserve and surplus has increased because of profits. So reserves and surplus has not been increased because of equity dilution. It has been increased by earning profits, and with cash flow coming into company, borrowings has also reduced, and current assets and cash and equivalents has increased. With all this happening since the commissioning, debt equity and leverage of the company has drastically reduced. So when we are making this video, company hasn't declared their Q4 FY26 result. So this is a slide which tells that we can predict that how the coming quarter results can be. So since company is ALMM listed, approved list of module manufacturer and cell manufacturers, they have to upload their sales data on DCR Portal, government domestic content requirement portal. So from there we can see that what company have sold in the quarter before company declares their result. So in a way it tells that how the company is performing before the market knows, and such forward information helps an investor to in times of when stocks are falling because of external reasons not related to company, and company is performing well, as you can see that in DCR portal, and you can load up on the stocks with more confidence that we know that company is performing well. The stock fall has nothing to do with company, it is because of market sentiments. So we have gone through the portal, and from Jan to March 2026, 161 megawatt of cells company have sold, and 80 megawatt of modules company have sold. So basis of the per megawatt realization, we think that company should do 380 to 400 crores of revenue. So it's going to be company's best quarter, and given their margin sustainability, we can also project profit of the quarter and profit of the FY26 as a whole. So in all, it gives a good view in advance to any investor whether company is doing well or not. In this slide we will talk about solar opportunity, and the most important point, ALMM-II advantage. So everyone knows government has set 500 gigawatt of target for 2030. So with so much of uncertainty with the oil imports and oil price, the transition towards renewable energy is only going to accelerate. Now with storage also coming into play, the renewable play through solar is only going to get stronger, because now the solar power will be available 24 hours with the storage coming in. So in whole, there is not a iota of doubt that the opportunity which lies in solar industry is humongous and real. Now the ALMM-II advantage is that from June 2026, all the government backed projects will use modules where cells has been used which are made in India. So it gives clear advantage to Websol, because Websol's whole 1202 megawatt of cell line is listed in ALMM-II. So, and since there is a supply gap between demand and supply of solar cell manufacturing in India and need for solar cells, Websol will have not a single problem in selling their whole production, and this kind of supply gap is not going to be fulfilled in a short time, and we think coming 1 to 2 years Websol should have clear good times in terms of top line and margin sustainability because of these policies of the government. Here is company's capacity expansion roadmap. So phase 2 has been completed on September 2025. So 1200 megawatt of cell line and 550 megawatt of module line is online. For phase 3, 2 gigawatt of cell line and module line are planned to be commissioned by July 2027, and for that company has signed agreement with the Andhra Pradesh Development Authority, and as on today Andhra Pradesh Development Authority has allocated land for Websol to construct the factory. Phase 4 of company adds more 2 gigawatt of cell and module and will take company's total capacity to 5.2 gigawatt of cell line and 4.5 gigawatt of module line. Here is Websol's competitive landscape. So few of listed players that can be compared to Websol's are Premier Energies, Waaree Energies, Vikram Solar and Emmvee Photovoltaic. So as you can see in the EBITDA column, Websol has the highest margin amongst all the competitors, and in terms of valuation, Websol is the cheapest among all. Capacity column, you can see that the industry leaders Premier Energies and Waaree Energies are more of module heavy, and if you compare with their cell, Websol is catching up to them, and going forward the company in the industry which backward integrates fast are going to be the winners. And you can see Vikram Solar till now doesn't have any cell line, and Emmvee Photovoltaic has more cell line than Websol and more comparable to Websol also. So to sum it up, in the last column, Websol is the cheapest plus have the highest margin plus fastest growth among all the listed players. Even though Premier Energies and Waaree Energies looks like a good bet, but given their market cap and valuation, their upsides lies only in their profit growth, since they are fairly valued. And Vikram Solar is module heavy, and given the future belongs to the backward integrated company, it is not a good bet to be taken. And Emmvee Photovoltaic, given its margin is less than Websol and fairly valued, we think Websol, given their current market cap, margin, and being more backward integrated and ALMM approved, is the best bet, and market have not really recognized its quality and re-rated it, and given earnings growth and PE expansion, it can give returns in good multiples in a short period of time. Key catalyst for the company in the coming times are ALMM enforcement, which is from 2 months from now, June 2026, and given there is more cell demand than supply, it will also play a part in re-rating the company. And for 2027, the successful commissioning of their top line in June 2027 will be another catalyst. And given the promoters shares are pledged, it becomes a risk also for the current time, and it may also become a catalyst going forward when they reduce those pledge. And more points to be keep in mind in terms of risk is margin compression. Even though company has guided for 2 to 3 years, that margin should sustain, and all the current market scenarios also suggest that it should sustain, given supply is less than demand. However, a key watch on margin should be kept, and any compression in margin should be looked into and asked for to the management for the reasons. Next risk that is their expansion, phase 3 and phase 4, and we will be watching a keen eye on that it is progressing successfully, and company should be able to commission their line as planned. In this slide, we will talk about why buying Websol will give you asymmetric bet. Given their current capacity and selling of their capacity, we can project their FY27 revenue and profit. And as per our calculations, company FY27 PAT should be around in the range of 450 to 500 crores, and their current market as on today when we are making this presentation, current market price is 86 and current market cap is 3751 crores. So even though if we apply a bear case of valuation of 10x, the price of stock will be more than a buying price, and if we apply a base case, it will give a handsome 1.5x to 1.6x of return in a short period of time. And given cell manufacturers should command a 30 fair value of 30x, which we think Websol will in coming time, given all the LLM2 benefits and demand supply gap benefits, Websol will have the potential to give 2.5x to 3x return in 1 year of time. So here are the reasons why we think the bull case of 30x PE Websol should command, given the manufacturing of cell is not a easy task. It is technologically high and it requires years of learning curve. Successfully commissioning and selling, and the fact that they have and they will be able to in the future also commands a higher valuation. And given their transition from obsolete technology to new technology, it also proves promoter pedigree, and their earnings are growth are market leading and cash backed, since they are converting all their profits into cash. And there is scarcity of cell supply in India. So going forward for 1 to 2 years, all the cell manufacturers will have a premium on them, and there is efficiency mode in Websol, and the LLM2, the government mode that has been given to cell manufacturers, will also play a part in giving Websol a premium valuation. So we have given buy rating to Websol because they have promoter pedigree, which is visible from when they have transitioned from old technology to new technology, and successfully turn around their financials and balance sheet, and they are LLM2 approved, and there is supply and demand gap, and their current valuations gives a for 4x return till March 2027 by way of upside from both earnings and valuation.